Good day, everyone. Thank you for joining us once again here at Seafried and Brew for our economic briefing. I am Jamie Sumner, Chief Analyst, and for this week's briefing, we want to look over the employment situation report that came out last Friday. So when we look at the employment situation report, as you know, we've created about 201,000 jobs above where we were last month, and right around where we were 2 months ago back in June. So overall, the report was fairly positive. So we gained 201,000 jobs. When we look at the type of jobs that were created, construction continues to provide some employment. We added 23,000 jobs into construction in August, up from where we were in July when it was 18,000. And we've continued to see this number fluctuate, but continue to increase though. When we look at the wholesale trade added 22,000 jobs, fairly strong, up from where we were last month at 10,000. And then we have transportation and warehouses also increasing 20,000 jobs. Down at the bottom here, we can see that healthcare and social assistance continue to produce the jobs here in this market, and that is up 40,000 jobs for the month of August. So we continue to see that healthcare and social assistance continue to churn out these jobs, an area that I would suggest our children start to think about getting into those positions, as well as the computer programming. So overall, we have a couple of high performing areas, but we are fairly spread out. We did, however, in terms of retail trade, see that come down by 5,000 jobs. So that's just something to be aware of when we see next week as we look at all of the different economic numbers that are coming out this week. Next week, we're going to cover some retail sales, inflation numbers, and inventory. So it should shed a little bit of light on the changes that we're seeing here. But when we look at the overall average hourly earnings, we can see it's up 2.9% over the past year, a little higher than we anticipated, or the surveys anticipated, but still under that 3.5% historical average. So we continue to see earnings increase, but not as fast as we would anticipate. And therefore, when we look at the labor productivity and the unit labor cost, we see in the second quarter, we saw the unit labor cost actually come down by 1%. So we see that coming down there, and that's positive, where we saw the labor productivity increase year over year. Taking a step back and now looking at the overall unemployment rate, month over month didn't change, stayed the same at that 3.9%. However, we saw a 0.1% decline in that U6 number to 7.4. So now we're down to about a 3.5% spread between that U6 and that U3, getting down to that average spread that we typically see between these two numbers. When unemployment is at or below 4%, this spread, however, on average is about 2 or 3.25%. So we're still above where that average is for where we are in the unemployment rate. Taking in consideration the information that has come out, and we look at the GDPnow from the Atlanta Fed, and you can see where we are, 4.4% as an estimate for the third quarter GDP. Very strong. Last quarter, they predicted it to be above that 4% mark, and it in fact was. We continue to see for the third quarter this at that above 4% level. So it'll be interesting as we move throughout the week and we get a lot of this different data coming out from inflation, inventories, and retail sales to see how this number starts to fluctuate. So we will report on that information next week when we have our briefing. That's what we have for this week. We look forward to talking to you next time. Have a great week.